Hey, this is John Starks. You be down here on the street and you watching Taking Stock.
Go home in Microsoft. 2 minutes to go here into the closing bell on this Tuesday, May 26th, the first trading day after Memorial Day. And how about this, Peter Tuchman? A very happy birthday on this day to the Dow Jones Industrial Average, created on this day all the way back in 1896.
I was there for the first birthday.
Unfortunately, we're not going to celebrate today with another all-time high, but we're not very far off, so a happy birthday to the Dow.
So obviously something's dragging down the Dow, but the rest of the S&P seems really strong.
Well, we got all-time highs for the S&P, for the small caps,
Yep,
for the tech-heavy
yep,
NASDAQ.
everything but the Dow.
The Dow's being dragged down by Goldman Sachs and Microsoft and UNH.
And they are ringing the bell.
There they are, but not down a lot.
Not so
UNH
much.
is down almost 3%. What did you
That's
see
fine.
into the closing auction for a holiday shortened trading week?
You know what? I'm seeing sell side come in, but it's amazing. For every sell side that's there's plenty of buy side. So I think people are positioning themselves coming into the end of I can't even tell if it's May or June at this point.
No.
You know, market feels strong. I mean, people are buying with intent, right? And I think everybody's focus right now is on the SpaceX thing. Right, unfortunately, I don't think we got that deal, but everyone's sort of a little bit sparse on their focus, right? We're still got plenty of buy interest in this marketplace. So the NYSE seems super, super strong.
Yeah, of course. And we also have the PCE inflation print. That's a big one. The Fed has said of all the inflation numbers out there, pick your acronyms, PCE is most important. So we'll see how traders respond later on this week.
That's because it's all middle America. It's basically people who are living paycheck to paycheck. That's their number. That's what it's all about. Not some of the other stuff. And that's important.
The Einstein of Wall Street, Peter Tuchman, thanks for joining us. Goldman Sachs now, time for the close. Team from Goldman Sachs, ticker symbol GS, down here on the trading floor of the New York Stock Exchange, bringing about a close to today's trading action. Your final tail of the tape on this post-Memorial Day, trading day here on the street. The S&P 500 in positive territory, 0.6%. Bit of downward pressure on the Dow 30 components like Einstein and I were just talking about there before the bell. The Dow will finish down, let's call it 0.2%. The New York Stock Exchange Composite Index in positive territory, 0.3. And how about the small caps? The Russell 2000 set also, once again, another all-time high close, 2920, up 1.8% on the day. In the S&P, technology stocks, materials, and industrials, those are your sector leaders. Your laggards, energy, staples, and healthcare. Caterpillar, Honeywell, 3M, your big Dow leaders, but your laggards, Chevron, UNH, and Cisco. Also catching a bit on the day, the big airlines with a strong leadership showing from Allegiant up more than 7%. Defense and aerospace. Most of the home builders in positive territory for this trading Tuesday as well. The auto giants led by Ford, semiconductors led by AMD, and memory stocks led by Micron up about 20%. Let's talk about all of that and much more with our first guest, Josh Schaefer, newsletter editor at Barron's. My man, welcome to the show. Nice to see you.
Appreciate you having me, JD.
I've wanted to have you on the show for some time. I ran into you down here on the floor last week. I said, let's make it happen. It's nice to see you.
Oh, great day to do it on some record highs, too. Market's buzzing. Excited to be here.
So we talk about leadership, kind of the generals leading the pack, the big technology stocks. It's not just tech necessarily that's doing a lot of that heavy lifting, but you take a step back from today's tape. We are having this all-time high conversation day after day. What do you see that's really leading the markets to these highs?
I mean, I would point to tech again. I mean, you look at the technology sector, tech up over 2.5% today, XLK. That SOX index, semis up over 6%. And really just Micron sort of the leader of the day. Micron up over 20% today, crossing $1 trillion market cap. And to me, sort of just the story of the market right now. Stock had already been up several 100%. A lot of people saying, did I miss it? Can it really go up more? UBS comes out and says, we think the stock's going to $1,600 a share, over $1,600 per share. That is up from a prior price target of $535. So they basically tripled their target. Investors say, ooh, I kind of want to get in on that. That's interesting. And that's really been a fundamental story for Micron too. Earnings estimates continue to move higher for that stock. So maybe the DRAM sort of trade is a little bit more secular than rather than just a cyclical year trade. Seems like people want to lean into it for a little bit longer than we might thought.
And when you talk Micron, very closely connected to that conversation are some of these other names you and I are taking a look at. Western Digital, SanDisk, you know the story with these. They've been absolutely parabolic. Maybe some people saying, hey, did I have FOMO? Did I miss it? How are you and your colleagues at Barron's thinking about a lot of those very hot to trot stocks over these last few months?
So we've stayed away from the memory trade overall. We've not picked a memory stock per se yet, but we have been in the semiconductor space. So we picked Intel ahead of earnings a month ago. That stock's up over 100% since we picked it. We picked NVIDIA a couple weeks ago. Essentially the NVIDIA pitch for us right now, fundamentals are clearly going to be there. Let's go best in breed if we think demand's going to keep increasing for these chip names. So we like NVIDIA over the next 12 months. Maybe it won't be as exciting as some of the names we just talked about, going up several 100%, but we think that they're staying power for the market leader.
Is there any other sector of stocks that you think we are not talking enough about? Something on your radar that you think is deserving of maybe a little bit more attention from would-be retail investors out there?
I think one thing that's interesting is thinking about other versions of the energy trade. So one ETF that we had picked a couple weeks ago was TAN. That's Invesco's solar ETF. So if energy demand is so big right now, where else could that be a beneficiary? Maybe it's solar. There's so much demand for energy, we're going to need different solutions. So yes, maybe that's sort of the green trade of a few years ago or maybe a decade ago is out, but there's still energy demand that you can extract from some of those solar companies. I think that's going to be an interesting one to watch.
TAN ETF up 4.5% today. Perfect timing for that. Before I let you go, my man, we got the PCE inflation print. We know what former Fed Chair Jerome Powell used to say, said of all the acronyms, that's our favorite, core PCE in particular. What are you looking for? What does the Fed do with it? You got 5 meetings left this year.
Yeah, if you look at sort of consensus estimates, looks like it's going to come in core PCE at 3.3%, slightly above the 3.2% you saw last month. I think at this point the market expects higher inflation over the next couple months. Fed hikes are already starting to get priced in. You've had this trouble in the bond market. Market keeps moving higher. To me, JD, the question at this point, can anything stop AI investment? Is inflation really going to stop AI investment? The market's voting no. I side with the market here. I think AI is the biggest macro factor, and unless whatever your headwind is, the Iran war didn't work, the oil spike didn't work, if it's not going to stop AI investment, I think you have to stay in the market, and that's why I think the market's probably headed higher.
Dude, those bond vigilantes came back with a vengeance early
And the market,
last week,
and the market didn't care, right?
And the market kept pushing
Shrugged it
higher
off.
for their
Yeah.
concerns about government debt and maybe incoming Fed Chair Kevin Warsh. Dude, come back again. It's nice
Yeah.
to see you. That's
Great
all
to
the
be
time I
here.
got. Skylar, grab your microphone. Howard, you and I will head this way. Here's some of the latest analyst calls that moved the tape this morning here on Wall Street you may have missed. First up, Citi initiating coverage on Bill Ackman's Pershing Square as a buy. They say the stock has some of the best attributes for an asset manager, setting a price target of 50 a share. Next up, Stifel upgrading Booz Allen Hamilton to a buy from a previous analyst rating of hold. They say the stock is simply too attractive to ignore at these levels. Shares are down about 5% since the start of 2026. And finally, HSBC, upgrading Marvell to a buy from a hold. They say it sees revenue opportunity. Stock is all ready to ride the AI networking super cycle. Marvell trading at an all-time high, up 140% so far year to date. All right, we'll take a look at one stock that calls the New York Stock Exchange its home. Down on the day and down very much for the year. Salesforce reporting tomorrow after the bell. Our good friend Jay Woods of Freedom Cap says, although the stock is in a major downtrend, 167 provides a key support level. He says if the stock can break north of 180 and close there, you could have a nice run as high as 210. Salesforce, the worst performing Dow stock so far this year, down more than 30%. Reports tomorrow after the close alongside other names like Marvell as well as Snowflake. Earlier this morning, FinTech TV's very own Vince Molinari sat down with Kevin McGurm, interim CEO of Trump Media and Technology Group, for an interview you simply cannot miss. Take a look.
Joining us now for his first live television interview as interim CEO of Trump Media Trump Media and Technology Group is Kevin McGurn. Kevin, welcome to the show.
Thanks so much, Vince. Thanks for having me.
Well, I am absolutely delighted and honored. First live interview as interim CEO, and even more so, we're so excited and appreciate the collaboration with Trump Media and some of our content on there and the continued exploration of more to do together. So thank you, and we're honored to have you today.
Thanks so much. Yeah, and we're happy to have you on the service, and you guys have been putting out great content for a long time, and it's great to be here.
Well, I love it. Hey, let's jump in. You know, we look at Bitcoin, it continues to scale its institutional adoption. People are watching it more and more as a global indicator. And I guess as we talk about watching things, with everything on chain, there's been some movement of your treasury with Bitcoin. Some of the street investors, hey, what's going on? Can you share a little bit with us?
For sure. I mean, at the headline, we're trying to diversify where our holdings are. That's just a security thing. It's a risk management principle that we want to be, very thoughtful about and have a diversified set of accounts that we trade from. And then more than that, we have a principal balance that we're trying to yield against. And that's something that we're very, adamant about. And when we go to run our business, we want a strong balance sheet, and those digital assets and the yield that they produce is something that's going to make us stronger and stronger as we do all of the strategic things that are out there in our business.
So I guess at the core, like any good treasury management, digital or other, it's a yield enhancement, putting that asset to work a little bit better, stronger, faster?
Yeah, well, for sure. I mean, the market is dictating what we do, right? And we feel that Bitcoin has a very strong position. There is some opportunity on the upside here as we go forward into the year. And we want to take advantage of that. Our ability and the size of the asset treasury that we have, which was raised in one of the biggest pipes that the street has ever seen, we have just a unique placement. We have a belief in this currency that we want to make sure that we, one, we're putting it to work for its best of ability, and then two, that we're keeping in mind all of our strategic opportunities with a merger, with our media company, and with some of the other businesses and technology that we're building out.
Great. Love your opinion. You have a vast background. Yeah. And when we look at this convergence, if you would, between media platforms, financial market infrastructure, digital ownership, are we late? Are we still very early? What's your sense?
I think we're early. When I look at the great unbundling of media, where broadcast and cable sort of fractured into this really tough consumer environment, where I think prices have soared and content has scattered, we actually feel like blockchain and crypto assets are a way that we can benefit the entirety of the consumer experience when it comes to watching media. The fact that Trump Media and Technology Group has a closed loop system where our mobile assets and our television assets are connected in a back-end infrastructure. If you think about where content discovery and enjoyment goes, we know that all of these things are linked together, and that our social media platform, which is the core of what we do, will be the beneficiary of how content is discovered, and then immersing yourself with that television experience where all of the engagement occurs.
Well, I, for one, love that vision, and it's really so true when we look at how content consumption is really defining the relationship and the connectivity with the stakeholders, whether they're viewers, shareholders, consumers. So bravo on that. I want to talk a little bit more about Truth Plus and the expansion of what's going on, and really the content distribution and how important original content is to you now, and what you have going on that side.
Yeah, I think at the core, mobile and television need to be connected with one another. Video has been the leader of getting more and more engagement on mobile. So Truth Plus was the natural evolution of our Truth Social platform into television. Original content, curated content, programmed content, hits and highlights that start in the mobile experience in short form can be expanded into long form on television. You're a great beneficiary of that. Other, broadcasters in the conservative news networks, family-friendly, faith-based content that we have on the service are going to be beneficiaries of that. And then ultimately, the consumer will be able to find what they want more quickly, and then jump in from that short-form experience into a long-form immersive experience.
Kevin McGurn, the interim CEO of Trump Media and Technology Group. Kevin, thank you so much for joining us. You got to come back soon. There's so much more to dive into.
You guys are the best. Appreciate you.
Appreciate you, my friend. Thank you.
Cheers.
Welcome back to the show. You're watching Taking Stock, this Tuesday edition, live from the trading floor of the NYSE. Our next guest joins us now live from the FinTech TV set, Benjamin Payard, founder and CEO at CAP. It's nice to see you here today.
Thanks for having me.
There's a lot of focus on credit markets right now, in particular private credit. Talk to me first and foremost about what CAP is all about, and how are you situated in that conversation?
Yes, private credit is definitely the talk with all these blow-ups that have been happening recently. CAP, we're a credit marketplace backed by Franklin Templeton. What we're trying to do is give private credit to the everyday investor by doing it in a safer, more transparent way.
Misaligned incentives can be a big challenge in the world of traditional finance. Talk to me about principal agent problems in credit markets. What does that even mean?
What it means is that the people that make decisions over your money are not the people that lose money if they make bad decisions. So you have these credit funds like Apollo that get to underwrite all these loans, but if they make a mistake, it's you that holds the bag. So what we're trying to do is remove or change who's making the decision so that they're aligned with the depositors.
You say that the solution to better credit markers is not necessarily better underwriters, it's actually better mechanisms themselves. Can you explain what that means?
Right, at the end of the day, it's all part of market incentives. If you set up the market incentives to where participants are aligned with those that take the risk, then they will make better decisions.
I want to ask you about tokenized private credit, 'cause I think this was pitched and at least discussed by a lot of people in the space as a significant breakthrough for the world of finance, but adoption overall has maybe been a bit slower than had been otherwise expected. Why hasn't tokenized private credit really delivered in full force just yet?
Well, because crypto people are not traditional finance people, but we still know a little bit about finance, and we know that these private credit funds are not as safe as the issuers say that they are. They're coming on chain because they want liquidity. They want to borrow at size against these assets that cannot be redeemed, and they want to do it at 3-4% APR. In crypto, we have better lending markets that can keep our users safer, and that's why most people haven't really bought them.
I'm really interested in this. You describe your platform as a vending machine for credit. How does that model look like, and how is it rebuilding the world of private credit itself, Benjamin?
Every single decision, every dollar, from the moment an investor puts it into our platform to whenever a manufacturing plant in Boston gets the dollar, every moment is automated by code. At no point do you have to trust us as a team. At no point do you need to trust any of the market participants. Everything has been thought of through code. Every decision has been limited by code, and so that you know how our platform will act. There's no chance for us to defraud our investors.
Benjamin, what is one reality of the general private credit conversation that you think far too many people still misunderstand? What do they still get wrong when they talk about the ecosystem?
I think the thing that they get the most wrong is the assurances that they have. So CLOs have been the most famous thing in private credit, where you collateralize all of the obligations with collateral. But do we really know how safe that collateral is? Do we know how liquid it is? I don't think people understand the health of those collaterals so much, and I think it's important for us to eventually move to more transparent systems like the blockchain to hold those collaterals.
All right, Benjamin Payard, founder and CEO at CAP. Very well done. Come back on the show anytime.
Thank you.
It's nice to see you here. Coming up, a lot more Taking Stock live from the trade floor of the New York Stock Exchange. Stick around. Sharpe.
We'll pass and maybe go one more block.
Welcome back to the show. Time now for the latest headlines in the worlds of fintech, crypto, and artificial intelligence for your Tuesday afternoon. First up, the crypto majors all down about 2%, with Bitcoin holding on right around 76,000. Next up, Pope Leo XIV calling for the disarming, in his words, of artificial intelligence, warning the tech could dehumanize society, destroy jobs, and concentrate power in the hands of tech giants. And finally, the SEC delaying a proposed rule that would have cleared the way for tokenized stock trading. The move comes as regulators raise concerns about third-party digital versions of public company shares. Last week on the J.D. Durkin Show here at the New York Stock Exchange, I caught up one-on-one with the great Frank Capillari of Cap Thesis. Of course, we know Frank is a CMT, so we had to hit the charts. I began by asking him about his price target on the S&P 500 based on the technicals. Take a look.
This is just an example of how we get price targets. And this was obviously one we've had for a while. And it's coming from a very small pattern there. You can call it a bullish flag formation. But this is the third upside target we've had, and two of them have already been acquired. And the way I like to talk about this is sometimes you don't see it happening early on in the process. And so when there's a big market sell-off and the market starts to come back, you have to look closely at the smaller patterns first. And once that happens and you see an upside target get hit, it gives us some conviction that a foundation can be built and higher targets can then be achieved as well. And so when you have a big extension like this, there's a bullish flag pattern. It was broken out from, and that is a measure move target. And so a few things about this. Number one, it's obviously getting closer to being acquired. When we first put it out there publicly, you can imagine there's some pushback, especially on social media, because we're already up so much. So I think that also brings into the conversation sentiment and psychology, where sometimes people just can't understand or conceive they can push that much higher above areas that we were before. And so when you get pushback like that, kind of give them an idea that maybe we could actually get there.
Let's go on to chart 2, a failed MACD sell signal. Once you get a MACD reference on the show, Frank Capillari, now it is a party. I know you like to call this the best trend indicator. It flashed a sell signal. What does that mean, and what does it tell you?
Well, number one is the first sell signal, as we can tell from a number of months going back to February. And so when you hear that, well, February is when things started to roll over. So it's ominous sign. But what we wanted to show here, the context of where these occurred over the last few years. And as this chart depicts, there have been a number of sell signals for the MACD. Most of them, as those blue lines show, have been failing patterns, meaning that there was a pause, momentum slowed down, looked like things are about to roll over after a big run. And what happened? Continued to move higher. And I think it's very important to look at what happened last April and May. Very similar, right? Up 20% from the low. Things started to slow down. MACD sell signal, it just did not matter. The market continued to move higher. Similar to right now, right? About 20% from the low. Finally, momentum is rolling over in the form of a MACD crossover. And could it lead to a big downturn? Of course, there's always a possibility of that. But this is the type of way that the market proceeds sometimes, right? You have a really strong move off of the lows, slows down, and that gives us the next phase of the market moving higher in a more consistent, sometimes boring way. But this is how you see long-term trends then develop.
Let's head over to chart 3, because it is post-NVIDIA day. I mean, like we were saying with Phil Rosen earlier here, Frank, I know you know Phil. It's kind of routine that Jensen Huang crushes the cover off the ball, and then we got some sell pressure. Sellers are a little louder the next day, stock down 2%. What do you see for NVIDIA relative to SMH? A little bit of catch-up here on this chart?
Yeah, definitely. We can see how much is underperformed. And I think this is a very good way of looking at it versus the SMH itself, right? SMH has been dominating everything from the lows, and NVIDIA's been part of that over the last few weeks. But as you can tell, that's just now moving out of an oversold condition on a weekly basis. And we have here showing the times when it has moved out of oversold territory before, just over the last number of years, and or you didn't want to sell NVIDIA versus the SMH when that has occurred. Could it be different this time? Yes. But two things. Number one, SMH has shown that it has not needed NVIDIA for a long time to accelerate higher. And there may be a rotation within the, the ETF itself, and NVIDIA, even though it's lower right now, could eventually, obviously get more demand as we've seen before. And if that's the case, then some of the other areas that are overextended within the ETF that capital can move into an NVIDIA, which really has been, I'm going to say, forgotten about, but not a factor in a long time within the semiconductor index, that is.
Welcome back to the show. Time now for the latest headlines in the worlds of startups, raises, and rounds for your Tuesday afternoon. First up at this hour, Eli Lilly buying 3 vaccine developers in deals worth nearly $4 billion combined. It comes as the major drug maker uses cash from its booming weight loss business to expand into vaccines. Next up, Stored raising $250 million at a $3 billion valuation as the e-commerce fulfillment startup looks to compete more directly with the likes of other competitors like Amazon. And finally, Aura, of course, the maker of the popular health tracking smart ring, confidentially filing for an IPO as it rides surging demand for AI-powered wellness and wearable health tech. And now Money 2020's very own Scarlett Sieber is back with a whole new edition of Hindsight 2020. That's where she breaks down important dates in financial history. Take a look.
I'm Scarlett Sieber, Chief Strategy Officer here at Money 2020, and this is Hindsight 2020. We're going to be going back almost 200 years, people, back to May 24th, 1844. Samuel Morse sends the first long-distance telegraph message. What hath God wrought? It doesn't sound like finance, but trust me, my friends, it does change finance forever. Until that moment, information moved at the speed of people and, of course, of horses. Markets were local, prices lagged reality, the telegraph collapsed time. Suddenly, prices synchronized, arbitrage opportunities vanished faster, capital moved with information. This was the first true financial network effect. Markets didn't just get faster, they became more competitive, more volatile, and more interconnected. If we fast forward to today, algorithmic trading, and hello, we're at the stock exchange, real-time payments, instant news, and you're still living with the consequences of that moment. Every technological leap that speeds up information also rewards scale, compresses margins, increases fragility when systems fail. So May 24th, 1844, it reminds us that finance doesn't evolve because money changes, it evolves because information does. So with that, that is your Hindsight 2020, because once speed enters the system, there's no going back. Back over to you.
Tomorrow morning here on Wall Street, we will get the latest quarterly results from a handful of key names. In the morning, we'll get the numbers from Dick's Sporting Goods, Abercrombie, BMO, as well as Manchester United. And this time tomorrow after the close, it's a big one. Marvell, Salesforce, Snowflake, U-Haul, and others. Thanks for watching this Tuesday edition of Taking Stock. Have yourself a great Tuesday night. We'll see you again tomorrow.